What is happening, investors? Welcome to the video. I hope you're having a great day. I certainly am myself. Today we are talking about Cciv yet again. It's like a parrot in the freaking room because I keep going on about it. But I've got some good information that I really want to highlight. I found an article from the Motley and it just goes, there was a specific paragraph about risk, and I thought it was going to be interesting to just go over and just highlight that this company is a rumor at the moment. Yes, everything is pointing towards it being particularly what we want it to be, but you've got to remember, until there's confirmation, there's so many things that potentially can go wrong and that the merger can fall through. But before we carry on, just remember that this is a place for discussion and this is not financial advice. And if you do enjoy the video, please like the video. And I'm getting a lot of views, but not subscribers. So if you want to stick around, hit the subscribe button because that would help me out. If not, no biggie. Thanks for being here anyway. But let's crack into it and get into the news. So I was doing some Cciv research and then I saw this. This SPAC could be the next Tesla. And I thought it was an interesting read. I went all the way down to the bottom and saw the risky business part. The hype and speculation has been rampant all week, pushing Churchill Capital IV's units, which each include a share and a 1/5 of a warrant, up to around 18 and nearly 17 for the shares alone, both as of yesterday. I'm not sure when this one was published, but hey, it doesn't matter about the share price. That represents a significant premium to the $10 NAV, one that many SPAC investors will balk at given no deal has been confirmed or announced. Additionally, SPAC merger deals can be structured in many ways, so even if Lucid agrees to deal with Churchill Capital IV, the details like private investment in public equity will have huge implications for public investors. If negotiations fall through or deal fails to materialise, Churchill Capital IV stock will likely tank, underscoring the significant risk of investing based on rumours and speculation. Theoretically, pre-target SPAC shares should never trade below 10, since that was the pool of money's worth originally. Some SPACs have briefly traded below $10, but arbitrageurs are more than happy to help correct the market mispricing. So that should be the extent of the downwards risk. But if the nascent EV make it and the SPAC Inc. and the subsequently close a deal, public investors might very well be looking at the next Tesla. And yes, this is still very risky. Every rumor is. We have to realize that until there is confirmation, our money and our capital is at risk. But if it all goes to plan, Lucid is on the cusp of starting deliveries, which is great news. Lucid, one of the most prominent electric vehicle EV startups, unlike many EV related companies that have gone public and skyrocketed in recent months, sparking valuation concerns and talks of the EV bubble. Lucid is relatively more mature. Many more bubbly EV startups have seen their shares soar, even if they are development stages companies with little to no revenue. In contrast, Lucid completed construction of its 700 million Arizona factory last month and is preparing to ramp up production. The manufacturing facility has an initial capacity to produce and deliver 30,000 vehicles this year, and then before expanding production to hopefully 400,000 vehicles annually in the years ahead. Deliveries of flagship Lucid Air sedan are set to begin this spring, with the company borrowing a page out of Tesla's book and initially selling the most expensive 169,000 trim before introducing successfully more affordable models. Here's also a great bit. Lucid has been poaching ex-Tesla employees at many levels throughout the company. Lucid hired Tesla's former manufacturing exec Peter Hollfinger in 2019. Tesla hired Hollfinger, an automotive production veteran who led Audi's A4 program for years and spent 24 years at the German automaker. Back in 2016, while Tesla struggled with the Model 3 ramp-up under the executive's watch, many investors have long speculated that CEO Elon Musk did not give Hollfinger sufficient autonomy to leverage his experience to do what he does best. And then it seems that even Musk is at least a little concerned about the competition when Lucid announced last fall that the standard price of the Air would be $69,900 after federal tax credit. The eccentric billionaire cut the price of the Model S to undercut the Air, while characteristically including some of his favourite juvenile references. So if anyone likes English football and remember Arsenal when they put a bid in for £40 million and £1 for a player, it's sort of Elon Musk has done the opposite to that, where he's gone, well, fuck you, 69,420 is going to be our price for our car. Childlike but humorous at the same time. So this video is just to settle everyone down and say, remember that your capital still is at risk, even though hopefully, and it's looking pretty much like it is to go ahead, and it is the company we think it is. We have to remember, until anything is confirmed, our money is completely at risk. So if you did enjoy today's video, hit that like button, subscribe to me, and help me out. Let's see if we can get to 100 subscribers by the end of the month, shall we? Let's have that as a goal. Anyway, please talk to me in the comment section below. I reply to everyone, and yeah, tell me if you bought any shares. Tell me if you enjoy the look, enjoy the sort of company, you like the look of the company. If you think this is completely bearish and you have no hopes for this whatsoever, you let me know, and yeah, I'll reply to you. Anyway, have a good one, folks. See you later.